Welcome back to Golden Rule Radio. We're back from a break last week, and we're going to talk about what everybody cares about this week, which is the World Cup final, France against Croatia. No, probably just gold. So,
mulligan?
No, we'll probably just leave that there because it's sure to be an exciting match. But we're going to talk about gold versus the dollar. If we flip one of those charts upside down, it's the other one. So where do you want to start today?
Show us that inverse relationship, Miles.
Yeah, you guys are right. I mean, as gold puts in that double bottom here around the 1240-ish mark, which is our 50% line off the previous high move up in metals. The dollar also moving up, doing about the exact same thing on the other side. However, like we've been talking about, I still think we're going to rally up to around that 50% level on the dollar, a little over 96, probably stop somewhere right around there because we're starting to see some pretty aggressive divergence. So as we see the dollar push up to that 96 level, on some pretty interesting news here politically.
Well, you say politically, it actually isn't meant to be political, that role, right?
So but has it become that or
right?
not? Yeah.
So, as those three branches of government were established, you have the judicial branch, which is not supposed to be just a platform for political agendas, but it sure has become that.
It has. The markets really didn't say much after his appointment of Brett Kavanaugh. David mentioned in the weekly commentary a couple weeks ago that he was the front runner, and so maybe it was something that didn't catch everybody off guard. The Dow was up about 150 points, but with the volatility that we've seen in 2018, to me that didn't say a whole lot. Gold didn't speak out really much, because hopefully what it's alluding to is the fact that maybe it is going to become a little less political and more just judicial in focus.
Well, and you mentioned the Dow. I mean, the Dow did have a jump up, but we've turned around and come right back down. All the Dow was really doing was filling a gap. So as I'll continue to say through the years, technicals always beat fundamentals in the short term, and news has almost nothing to do with how markets actually trend and go. So you'll see those short-term movements based on events that take place. But in the long run, traders always beat news analysts, and the trends always beat everything.
You answered the question that a client of mine asked me over the 4th of July. He asked me about why on this show we don't address fundamentals as much as we do technicals. We're talking a lot about technicals here. And so I had that question, and we have that question a lot. Not just about why we don't talk about it, but why focus on the technicals? What does it really matter? Do the technicals really dictate the market? And I used to be more of a fundamental guy. The more I've learned about technical charts, the more I've learned that technicals typically do control the market, and the news events are just going to provide what do you want to call it? Stimulus, a catalyst for what the technical chart was going to do anyway. Was that a good way to put it, Miles? I think you probably can phrase it better than I can.
Yeah, and I don't know if I'd say fundamentals there. I'd certainly say news.
Or any news?
Or immediate information. I mean, what's one of our favorite books around the office?
A Brave New World?
Extraordinary Popular Delusions and the Madness of Crowds. Charles Mackay's book from, 100 years ago?
I think it was like 400 years ago, 1600.
I don't think it goes that far back. Maybe kidding. It does. But, what the news is it's just an example of how crowds start running in the same direction, not even knowing either A, what they're running from, or B, what they're running towards. You just see a bunch of people doing something, you say, I guess I got to be a part of that. The reason we like the technicals here is because they lean into the fundamentals that drive the market as a whole and dictate trend. So like I said a second ago, trends number one, technicals number two, news is just the bumps in the road.
Yeah, but the fundamentals are the reason that we're talking about gold at 1,240 instead of 840, right? So we can focus on a week-to-week basis on the technicals. So I appreciate that client's question, because this is a weekly YouTube program, right? This isn't a monthly or an annual kind of thing that we come out with. So yeah, you are going to get focused on the technical. The fundamental reasons are the primary reasons to be diversifying into the physical precious metals, though, and all you need is those long-term charts, and you can go back 50 years, you can go back 5 years, and it's the fundamentals that are speaking. The invaluable information that you two provide on a technical standpoint each week gives people great opportunity for entry points, exit points, strategizing, and the opportunity, obviously, to have peace of mind with what's going on in the markets on a week-to-week basis.
And as usual, I mean, if you found your way to a podcast like this, we're always making the assumption that our listeners are already following some of the fundamentals and the trends that are taking place on a global scale. And if that's not enough, we have about a 30 to 45 minute podcast we do also every week that focuses solely on that. So if you're a listener here to Golden Rule Radio, you haven't come across the McAlvany Weekly Commentary hosted by Dave McAlvany, Kevin Orrick, we encourage you to go listen to that every week as well.
Before we leave the fundamentals, Miles, I just want to do a real brief recap. You guys jump in here, right? Fiat currencies, debt, inflation, the depreciation of the currency over time. Those three alone are the only fundamentals that you really need to focus on when it comes to a portfolio diversification into physical metals.
So moving back over to the portfolio diversification aspect of this conversation, what do you guys think about silver? Silver seems to be the only one kind of holding its trend line. We'll look at a platinum chart here in a minute. Platinum broke down strong. Gold obviously has been coming down, standard June, July practice for gold. Silver really is still sitting in that declining wedge, so we can expect a breakout in silver again coming here soon. I would assume sometime early to mid-fall. So what are you guys seeing in the silver price right now?
Well, it's pushed below 16, and I think the previous low is right around 1570, and then the next one down a little bit farther, 1550. It's going to try to push into those levels, and I would say that they're going to hold, and silver's going to move higher, wouldn't you say?
I agree, and the reason I think that is most accurate is because of the ratio. It also has come off 3 points this year from 81 down to where we are 78. We did see 77. So to me, that's actually very bullish for silver too. And in a way, even though it's not the spot price leading the way, it's the relative price that to me is leading the way with gold and lends support to the fact that we should see it get some wind in its sails.
What I have struggled with silver is that I bought it at 30. It had gone from $8 all the way up to $49 in April 2011. It peaked. The COMEX started raising margin requirements. That's a whole nother story for another show. But silver came down from 48, 49 down into the $35 range. And I, as well as many others, were buying silver aggressively. We thought it was going to go to 100. 3 digits. It's going to go there eventually. It's just a matter of time. But we were buying. I was buying at 30, 35 because it was probably and should have been on its way to 100. Well, what I struggle with is here it is at 16, and I've been beaten down from 30 something dollars an ounce down to 16 with silver, and I'm not as excited about buying it at 16. Why? Psychology, I guess, because it's not fun right now. It was fun then, because it was hot market and everything. So it somewhat relates to the seasonal nature of what we're talking about here. This is the time that people need to be buying, which is the lows that it typically puts in June, July timeframe. That's when we should be buying so aggressively. But are we buying?
Well, the other thing that we tend to lose sight of is that ratio. We had George on the program here a few weeks ago regarding the double eagles. He'll be the first to tell you, you don't ever worry about what the spot price is doing. You always look at the relative value. And we've preached that on this program. But Robert, at that time, you also saw the ratio jump from 31 up to 55, and silver suddenly became a much better relative value. Well, now it's an even better relative value at an even lower price. And you're right, the psychology kicks in, and there should be zero hesitation on our part.
There should be. I should be aggressively buying, and I think I'm going to.
So continuing our diversification talk this week, from gold to silver, silver to platinum. Guys, platinum put in the lowest price in almost 10 years. Lowest price since December 2008. We hit the 800 number last week, I believe on Tuesday last week. Bounced pretty hard off of it, but platinum below its trading channel that it's been in for, a year and a half now. Have we put in a bottom in platinum? Does it even matter? Off of the last conversation.
Speaking about the platinum price alone, you have to look at platinum relative to gold. Last week, platinum reached the lowest percentage below the price of gold that it ever has traded. got down to something like 36% below the price of gold. So in 50 years, since 1968, when platinum was discovered as its own metal, it has not traded this far below the price of gold. And it's said to be about 5 times rarer than gold. So just on a relative basis, it would be a buy relative to gold.
Not just gold, but also palladium and silver. So, you know, to sort of wrap this up in Miles' diversification approach here, silver, platinum, and as we alluded to a few weeks ago, double eagles on the gold side is our current recommendation. And by being in those 3 strategies between premiums and ratios, you have a really good opportunity to have your account grow and accumulate ounces without adding money constantly. So that's the way we manage it. And so I hope you're hearing relative value, relative value, relative value in those ratios and premiums.
So to wrap up here, guys, I'd like to throw out one specific recommendation as we close. A lot of our listeners have and have not done some business with us through the years, and a lot of our listeners may be sitting on gold positions that they've bought over the last 10, 20, 30 years. Tori and I just talked about platinum there for a second. There's a lot of opportunity in the swap ratio right now, especially for people that may have picked up large gold positions back through the mid 2005 to 2010 range, when that ratio was not 0.6, 0.7 to 1, but instead up around 1.5 or 2 to 1. So if you're sitting on some gold positions that was bought as a product, not with purpose, let's help give you some purpose within your portfolio. Give one of our advisors a call. We can talk through some of the ratios, swap trading, premium trading that we try to do with our clients to help increase ounces over time, build a strategic portfolio within the precious metals, and not just park something in your basement hoping the spot price goes up.
Thanks for listening. You can call us at 800-525-9556. You can follow us on Twitter at ICA Gold. You can like us on Facebook at McAlvany Financial. And you can always click the subscribe button below to subscribe to our YouTube channel.
Thanks again for listening. Have a great week.